Okay, so you're here because you want to, you know, figure out these prop firm challenges, right? But you don't want to get lost in all the theory.
Yeah, exactly. You want the practical stuff.
Right. And that's what we're going to do today. Like, we've got someone who's actually done it, passed a bunch of these evaluations, gotten funded, and we're going to break down what they did.
No fluff. Straight to the good stuff.
Yeah, just the actionable strategies.
Yeah.
And it's interesting because, these things work across a lot of different firms.
Absolutely. Like, if you're thinking about Hoorah Trade, Quant Tekel, Instant Funding, Think Capital, I mean, even some of the international ones like Alpha Capital Group UK.
Yeah, MyFundedFX. We hear about those a lot.
Right, and even the ones that focus on specific niches like, what was that one? Fxify.
Fxify, yep. So a lot of variety, but the cool thing is the core principles, they kind of stay the same.
They really do. It's all about showing them you can handle their money.
Right. I mean, basically, a prop firm challenge is like an audition. They give you a demo account. They say, okay, make the, say, 10%.
That's a common target, yeah.
Yeah, and then there's all these, like, rules, right? You can only lose so much per day, so much overall.
Right. Got to stay within those limits, typically in like a 30 to 60-day window.
Yeah, and you have to follow their risk management guidelines, too. They're really testing your discipline, Can you control your risk?
Exactly. Can you consistently make the money without blowing up? That's what they're looking for, consistent and responsible profitability.
Yeah, exactly. It's not about luck. It's about having a sustainable approach.
So are you ready to dive into these secrets?
Let's do it. Let's start with secret #1, mastering risk management. I think this one really hit home for the trader we're talking about. They actually failed their first funded challenge because, they went all in, trying to get those huge wins fast.
Yeah, overleveraging. Classic mistake.
Yeah, but then one bad trade wiped them out. It was like a wake-up call.
It really shows you how fragile these challenges are if you don't make risk your #1 priority.
Absolutely. And from that moment, they completely changed their approach. They started risking, like, a tiny amount per trade.
We're talking about 1% of the account, max.
Yeah, which, I mean, to some people might seem crazy conservative.
Sure, but it's all about the long game. You're protecting your capital, right?
Yeah, so that a couple of losses, which are inevitable, don't just knock you out of the game completely.
Exactly. It's about creating a buffer against the inherent unpredictability of the market.
Right. And it wasn't just about the percentage, right? They were really careful about where they placed their stop losses.
Oh, absolutely. It had to be logical.
Yeah, based on technical analysis, like where would the price have to go to prove their idea wrong? That's where the stop went.
So no emotional decisions, just pure data-driven logic.
And then, get this, they actually set even stricter daily loss limits than the prop firm required.
Wow. So they were proactively limiting their potential losses even further.
Yeah. They were like, I'm not even going to get close to those boundaries.
Talk about a commitment to risk control. That's really impressive.
And you know what? It worked. This is the crazy part. They specifically said that this disciplined risk management approach helped them pass a challenge with Hoorah Trade, and that's how they got funded.
So right from the get-go, we see that rock-solid risk management is absolutely essential.
It's the foundation. Okay, so let's move on to secret #2. Using a consistent trading strategy.
This is another area where a lot of traders make mistakes. Kind of jump around.
Oh, yeah, the strategy hopping.
Yeah, they see someone else having success with something, and they're like, oh, I got to try that.
Yeah, or they have a few losses, and they think, maybe this strategy's not working.
Right, they just keep switching, never really mastering anything.
It's like trying to learn 5 languages at the same time, right? You pick up a little bit here, a little bit there, but you're not fluent in any of them.
Exactly. And this trader, they admitted to doing that early on. They tried everything. Scalping, swing trading, even those automated systems.
And as you can imagine, it didn't really lead to consistent results.
Not at all. What finally clicked for them was finding a specific style, something that really suited them, and sticking with it.
So for them, it was breakout trading, specifically on major Forex bears.
And the key here is they didn't just randomly pick this.
Right.
They did a ton of back testing. They wanted to see how this strategy would have performed in the past across different market conditions.
Yeah, that's so important. It gives you that data-driven confidence, right? You're not just going off a hunch.
And then, the hardest part, they stuck to the plan even when they had losing streaks.
Which, happens to everyone. It's so easy to want to just abandon everything when you're losing.
Right. But if you've done your homework, if you believe in your system, you have to ride out those tough times.
Yeah, and they said that this approach was really successful for them at Quant Tekel. That's where they got funded.
So, consistency, based on a proven edge. That's the takeaway. And speaking of doing less,
Yeah, let's talk about secret #3. Trading less, earning more. Now, this might sound a little weird, especially in the world of day trading, where it seems like everyone's making a million trades a day.
it's all about quality over quantity.
Yeah, this trader learned that you don't need to be constantly in the market. It's about being patient, waiting for the right setups.
The ones that really fit your strategy.
Yeah, and avoiding FOMO,
Right.
that fear of missing out. It's like, everyone's in this trade, maybe I should be too, but...
But it doesn't fit your plan.
Right. And they developed this really interesting strategy. They said anytime they had a losing trade, they would just walk away from their charts for the rest of the day.
That's smart. Preventing revenge trading.
Right, because that's when you get emotional and start making bad decisions.
You're not thinking clearly.
Yeah. So stepping away, it helps you reset, come back fresh.
That's a sign of a truly disciplined trader.
And they also focused on trading during those peak market hours, like the London and New York opens.
Yeah, that's when you typically see the most volatility, the most opportunities.
Right. And guess what? They actually passed Instant Funding's Fast Track Challenge by only taking 2 trades per day.
2 trades. That's incredible.
Yeah, it shows you, less can be more.
Quality over quantity, right. Which leads perfectly into secret #4. Managing emotions like a pro.
Okay, so this is where things get really interesting. This trader was adamant that trading is more about psychology than strategy.
Like 80% psychology, 20% strategy.
Yeah, a huge emphasis on the mental game. And they said they struggled with this a lot in the beginning. Emotions were getting in the way, leading to bad decisions and blown accounts.
It's a common struggle.
So what did they do to get those emotions under control?
Well, they started keeping a very detailed trading journal, but it wasn't just about the trades themselves. They also recorded how they were feeling before, during, and after each trade.
Wow. So they were really trying to understand the emotional patterns that were impacting their trading.
Exactly. It's all about self-awareness. And then they had this simple yet super effective habit. They would meditate for 5 minutes before each trading session.
Just 5 minutes.
Yep, just to get centered,
Yeah.
calm and focused.
Yeah, and that makes sense.
It helps you avoid those impulsive emotional reactions. And then, whenever they had a losing streak, they would take a full day off from trading.
A whole day.
Yeah, just to reset completely, let the emotions settle, come back with a fresh perspective.
That's smart. I need to try that. And they said that this emotional discipline was key to passing Think Capital's evaluation.
It allowed them to avoid those unnecessary risks that come from emotional trading. It's amazing how much of a difference it makes.
Okay, so let's move on to secret #5, understanding each prop firm's rules. Now, this one might seem obvious, but you'd be surprised how many people trip up on this.
Yeah, people tend to gloss over the details,
They just see, 10% profit target. Cool, let's go. But it's so much more than that.
It really is.
Yeah.
This trader, they were meticulous. They read every single rule of each firm they considered. The profit targets, the drawdown limits, everything.
Yeah, because those can vary a lot from firm to firm.
Absolutely. And some firms might have restrictions on what you can trade, how much you can risk on each trade, even what trading styles are allowed.
Yeah, so you really need to make sure that the firm you choose aligns with your trading style and your risk tolerance.
Exactly. If you're primarily a Forex trader, you wouldn't want to go with a firm that's heavily focused on futures, right?
Yeah, that makes sense. And our trader, they gave some great examples. They said top-tier trader is really good for beginners because they have a lot of educational resources.
Yeah, and then you have Fintokei, which is known for their innovative programs. They do things a little differently.
And then there's MyFundedFX, which has a big supportive trader community. So it's not just about the numbers, it's about the whole environment.
Right. It's about finding a firm that you feel comfortable with that fits your personality and your goals.
Okay, so our final secret #6, taking advantage of discounts and coupons. This is a good one. A lot of people don't realize this.
Yeah, a lot of these prop firms offer coupons and promo codes to help reduce those upfront costs.
Yeah, because those fees can add up, right? Especially if you have to take the challenge a few times.
Exactly. And this trader said there are all sorts of discounts out there. General coupons for Hoorah Trade, promo codes for Quant Tekel's quant programs, sometimes even up to 50% off at Instant Funding.
They also mentioned special deals for new traders at Think Capital and premium funding at lower prices with top-tier trader.
Yeah, so there are definitely ways to save money if you look for them. This trader even recommended a specific website, couponterra.com.
Oh, yeah, they have a bunch of promo codes for different firms. It's worth checking out.
Definitely. Why pay full price if you don't have to, right?
Right. So, what's really interesting about all this is that this trader, they showed us that passing a prop firm challenge, it's not about luck. It's about skill, discipline, and mindset.
And they weren't afraid to admit they made mistakes along the way. They learned from those mistakes and they kept going.
Yeah, and they ended up getting funded multiple times. So to recap, the 6 secrets are risk management first, consistent strategy, quality over quantity, managing your emotions, knowing the firm's rules, and taking advantage of those discounts.
It's a powerful combination.
So what are you waiting for? Go out there, find the right firm for you, and start putting these strategies into action.
And as you do that, I want you to think about something. This trader, they emphasize how important emotional control and discipline are for trading success.
Yeah.
But think about it. Aren't those same principles, controlling your impulses, sticking to a plan, aren't those important for other areas of life too? Your career, your relationships. It's something to really consider.
That's a great point. So yeah, think about how you can apply these lessons beyond just trading. Thanks for joining us.
And good luck on your prop firm journey.
We'll see you next time on The Deep Dive.